What up, YouTube? Welcome back to another major market breakdown. You probably noticed the difference in the acoustics around me. I gotta get some soundproof foam in here. This is my new office, new studio-ish area. Finally moved into the new condo. I'm gonna do a house tour on the channel at some point, but we're waiting on like a bunch of furniture and stuff to come in. So we gotta fully get the house set up and everything. But I got my office menially set up at the moment, so I can go ahead and get this content out to you guys. But without further ado, you know where we usually start at. Hit that like button, sub button, and that bell icon. All that's gonna tell the algorithm this good content needs to get pushed forward because hey, listen, we're in a season of growth, y'all. So hit that sub button. It turns out like 90% of the people that watch the videos aren't subscribed. So if you're getting value out of this, go ahead and hit that button. All right. But yeah, without further ado, let's get into DXY. So we got some. So I was pretty busy last week, like most of last week, moving and going back and forth between this house and the last and stuff like that. But I stayed pretty tapped into everything, and not much has changed. For the overall picture from our last week's breakdown, we're still looking at more downside on the dollar. There was some can't remember the exact. Can't remember exactly what data it was that came out that let me know that there was still going to be more downside on the dollar, at least pushed off. But the government's open. That's let's get a round of applause for Democrats and Republicans to finally agree a little bit. The government's back open. So we're gonna get more government data soon, and I think it's probably gonna kind of open up the picture on whether we're going for a soft landing or if we're actually in for a soft landing or if we're gonna be in a recession within like the next 2-3 months. Like a credit shock is on the table, of course, but I think that there's enough planning at the top for there not to be a credit shock. But yeah, I'm not gonna be on their side and make you think everything is safe because I don't actually think it is. But how are we gonna make money from all this information? Simple. So dollar's going down. We may get a little bit of a correctional move to like let me mark it off so you can see it. Like this little area here, maybe at most, but I don't see us closing above that area. We might tap it, but honestly, I don't even think we're gonna go above this swing high. I'm seeing downside. Like the next real level that I think buyers may have something to say will be this 98 700 level. And once we get down there, I think even more sellers are gonna be like, let me get in on it. So it might just start dominoing into more dollar pressure. The dollar's under pressure just because we know, like they're acting like they're not gonna cut rates, or they're acting like that we may not cut as much, but we know that rates need to be cut. And I think the data that we're gonna see coming out over the next couple of weeks, now that the government is open, is gonna start to support that more. So how are we gonna be trading that? Start with the euro. If it'll load, I'm sorry. I'm using my phone's hotspot for the whole setup and everything because the Wi-Fi is taking like 2 days to come. And we ordered it before we got here, so we would have thought that it would have been here when we got here, or at least like yesterday, like at some point it would have got there or something. But it's supposed to be here today, so should be fine. Hopefully by the time I get to start uploading this, it's here, so it uploads fast. But I got into another buy last week. I'm pretty sure this is the one that we spoke on the. May not be. I think having different charts. No, it is. Okay, yeah, it is. I like the Oenda chart because I trade with Oenda specifically, but I do have markings on, I believe, Tickmail. Hold on a second. Nope, I guess I'm mistaken. I thought I had put levels on this one too. But no. Oh, I did. It was just loading slow. Jesus. Yeah, it's because my phone's on it, my girl's phone's on it, that laptop's on it, this laptop's on it. Yeah, and my iPad is on it as well. So even with the upgraded boost, you know what I mean? There's only so much it'll do. So, but I'm looking on more upside on euro. We may, like I said, inverse on the dollar. We may get a little bit of a pullback under this low here. If I can get a zoomed in on these guys, you can see these levels a little better. We may slide up under this low and tap this level here one more time, but I wouldn't bank on it. That's why I'm already in the buy for euro. But if we do get another push below that low, then it will be an opportunity to get in and take this higher. Something I've been looking at, and honestly, for right now, the way that the dollar is kind of like flagshipping and leading the charge, trade AU and GU this A. Look for a low to get broken, get in there for the buy against the dollar. NASDAQ. I'm looking for. I want to sell in trade. I really, really do. I do. This is looking bearish to me. And then you have so many analysts kind of coming out and speaking on things and whatnot, and it's causing a lot of outflows. Like people are taking their money out of NASDAQ, SPX, companies, and the indexes themselves. So I think we're in for some more downside coming in. I don't think this is it. I do think we're gonna finish the year bullish, but I think that this level down here, this 24,170 ish area, is yanking us. It's come on, come see about it. And we were speaking about this level when it got tapped here, a while ago. That level look nice, the level look great. And honestly, there is more levels down here that aren't terrible. For if it goes to 2,300, right? That is an opportunity to get long-term positions. You know what I mean? I wouldn't be mad at it. And we're seeing the breakdown happen. You know what I'm saying? We've seen it create a new low here, and that's what's telling me okay, we made a low, we made another new low. I might make another low, unless this decides to break out of here on this bounce. But I'm going to be taking small, very small managed positions, sell positions out of this area. Now, granted, I'm giving it this much room, but I honestly for it to really be the trade I'm looking for, it would need a solid rejection right here. We don't really need too much activity up in this area. Solid rejection off of here, lets me know that the bears are trying to take control of this market here. And then even if that rejection doesn't fully push us down and then it plays up in here, I'll still like it because of getting that rejection off of this level, and I'll still let it play out in this area and trickle down. So that's what I'll be looking to trade on the NASDAQ, and that's how I'm looking to trade the dollar now. Gold is really just inverse of the dollar, right? Usually, right? Main thing. But we're in a little bit of a tricky area right now where because gold is supported by tension and things going on and outflows of risk assets. That's the things that supports gold. Now we're looking at sells on the dollar, which is usually inverse to gold, but at the same time, I don't think that risk assets are as being outflowed as the news would have you think. Banks buying a lot at 110K. I mean a lot, a whole lot. You guys can go see the heat maps. There's a lot of orders at 110, strong orders, and then Also, that 94K area is protected, man. It's protected by miners, Bitcoin miners, and institutions, right? So I was like, listen, if they protect that level, I'm confident in the bull run for the rest of the year. And they protected that, like, right on cue. Everything happened. It dropped while I was moving stuff around. And I looked, checked my phone, boom, bounced right off like 94. I think it hit like 93.9 something, and wicked right back. So I don't know. I like it. So that makes me a little bit confident in gold kind of cooling off right now. You know what I mean? Like, gold has room to cool off. It's reasonable for gold to cool off. I'm not trying to like call the bottom or nothing like that, but it's reasonable. And if this level here fails, that's what's gonna happen. Now, this level here doesn't fail, and you know, anything happens between, you know, China and the U.S. in tariff speak, then we'll probably buy off of it. But as we're cooling down, tensions are cooling, tariffs are cooling, government's back open, like, you know, things can flow back into the risk market a little more, and that'll allow gold to cool off a little bit. And I ain't gonna lie, like, any of these levels down here is cool with me. Like I said, same thing with NASDAQ. Long-term buys, you know, that's what I'd be looking for. So not to say that, like, I know there was a little bit of up and down. Essentially, my bias this week is against the dollar, so we're trading against the dollar, except like gold. Like, I think most of you should leave gold alone this week, just because, like, I'm seeing dollar downside reasonably, and I'm seeing gold downside reasonably. You know, and they may flow together. That happens. It's not impossible for that to happen. That happens. But, you know, I'd like to see how it plays out. You know, in seeing that, we usually like to see, you know, more confluence when it comes to dollar and gold, and we see dollar and gold kind of button heads. You know what I'm saying? It's time to be a little cautious. All right. Little bit cautious. All right, I hope y'all have a good week. I love y'all. Make sure you're kind to somebody. They hit that like button, that sub button, and that bell icon. All that's gonna tell the algorithm this is good content. And before I go, I want to remind y'all one more time. I remind y'all, like, almost every video, that, like, this free web tool right here that's in the description, the link in the description. You guys can just go to it, check it out, use it. Anytime you're about to take a trade, you know, just come in, type it in here, and just see what the momentum is reading, because I ain't gonna lie, it's a banger. You know what I'm saying? Like, if it says bullish momentum incoming, you know, at least 7 times out of 10, bullish momentum is incoming. So, you know, you can add it as an extra layer of influence. Maybe you can just check through all of the markets that you trade before you actually start looking at charts. So you can have an idea of what's going on before you look at the chart. You can use it in a multitude of ways, but it's free to use. You don't have to sign up or anything. Go use it. All right. Again, I love y'all. Make sure you're kind to somebody there. I'm gonna catch you on the next one.